Welcome, everyone. Today, we're bringing you a comprehensive explainer on the brand new appellate framework under the Income Tax Act 2025. Whether you're a seasoned chartered accountant, a tax professional, a student, or a business owner, we've designed this breakdown of Chapter 18A to get you up to speed quickly and clearly. Let's dive right in. Picture this practical situation. You, or maybe your client, just received an adverse assessment order, or a penalty notice. Your immediate thought is, okay, how do we challenge this? Now, under the old regime, you knew exactly where to go. But with the rollout of the Income Tax Act 2025, the rules of the game have been updated. Today, Chapter 18A is your brand new roadmap for dispute resolution. So let's figure out exactly how to navigate it. Here is what we're looking at today. We'll quickly cover 1. Appeals under ITA 2025. 2. Key legal provisions explained. 3. A real-life taxation example. 4. Compliance and statutory forms. 5. Common practical issues. And finally, 6. Key takeaways and summary. Section 1. Appeals under ITA 2025. All right, let's look at Chapter 18-A, which spans from Sections 356 right through to 374. This is basically your consolidated statutory framework for all tax appeals, revisions, and alternate dispute resolutions under the 2025 Act. Interestingly, while the section numbers themselves are entirely new, the structural architecture of the appellate remedies is pretty much intact. Think of it like a new coat of paint on a very familiar building. That sequential ladder going from the assessing officer up to the first appellate authority, then the ITAT, the High Court, and finally the Supreme Court, it functions exactly the way you remember it from the 1961 Act. Moving on to Section 2, Key Legal Provisions Explained. Now, if you're a seasoned pro, you're obviously very used to the old sections 246 and 246A. Under the 2025 Act, those have been swapped out for sections 356 and 357. Section 356 handles appeals made before the Joint Commissioner of Income Tax, or JCIT appeals. Meanwhile, Section 357 governs appeals before the Commissioner of Income Tax, or CIT appeals. Both of these authorities serve as your first appellate forum, and as always, your specific jurisdiction is just going to depend on the rank of the officer who passed the original order and, of course, the exact nature of the dispute. But what happens if you don't get relief at that first stage? Well, the higher appellate forums step in. Section 362 now governs your appeals to the Income Tax Appellate Tribunal, the ITAT. Section 365 covers appeals to the High Court, specifically those involving substantial questions of law. And Section 367 handles appeals going all the way to the Supreme Court. The absolutely crucial thing to remember here is that the procedural powers of these authorities, like their power to confirm, reduce, enhance, or annul an assessment, along with the statutory time limits, they remain materially unchanged from the old 1961 Act. Now, here's a real game changer. The new Act brings forward a brilliant mechanism to cut down on repetitive litigation. Because really, why fight the exact same battle twice? If an identical question of law is already pending before the High Court or Supreme Court, you don't need to reinvent the wheel. Section 375 introduces an assessee-driven declaration, which effectively replaces the old Section 158A, where the taxpayer basically agrees to abide by the higher court's final decision. On the flip side, Section 376 allows a collegium of tax authorities to actually defer filing departmental appeals on those identical legal questions. It really streamlines the whole dispute resolution process. Section 3. Real-life taxation example. Let's walk through how this actually plays out in the real world. Say a business owner receives an adverse penalty order from an assessing officer. What's the exact step-by-step journey? First, well, you receive the order. Second, as the tax professional, you sit down and draft a crystal clear statement of facts and your specific grounds of appeal. Third, and please note, this is a strict statutory deadline. The taxpayer has to electronically file the appeal within 30 days of receiving that order. Under the new rules, you're going to do this using Form 99. Finally, the JCIT appeals or CIT appeals will fix a day for the hearing, review your evidence, and issue a written order to dispose of the appeal. Section 4. Compliance and statutory forms. Okay, grab your notepads because these form updates are perhaps the most critical reference for daily practitioners. The Income Tax Rules 2026 have completely renumbered the forms we all use every single day. The familiar Form 35, which you use for appealing to the first appellate authority, that is now Form 99 under Section 35A. When you're taking a matter up to the ITAT, the old Form 36 has been replaced by Form 115 under Section 36(2). Filing a memorandum of cross-objections, you'll be using Form 116 instead of 36A. And for deferring those appeals on identical questions of law we just talked about, Form 8A is now Form 118. You will definitely want to take a moment to mentally map these out. Now, when it comes to filing these new forms, strict compliance is literally everything. Forms 99 and 115 have to be filed electronically via the e-filing portal. You've got to attach your statement of facts, your grounds of appeal, a copy of the disputed order, and of course, proof of payment for the prescribed appeal fee. But the major update you need to be aware of here is the absolute emphasis on digital verification. The system no longer requires, or even wants, physical signatures or official company seals. It relies entirely on digital signatures and electronic verification codes. Section 5. Common practical issues. So with any massive legislative shift, we're bound to see some friction points, right? Let's examine the transitional provisions under Section 536. The single biggest question professionals are asking right now is, which act governs my appeal after April 1, 2026? The golden rule here is based on the tax year. According to Section 536, specifically subsections 2C and E, if an appeal was already pending before the transition, or if you're filing a fresh appeal for a pre-transition year, like assessment year 2025-26, it is going to continue to be governed entirely by the old Income Tax Act 1961. The 2025 Act procedures only kick in for tax year 26-27 and onwards. Here's another one that comes up all the time, addressed perfectly by Section 536(2)K. Can the new act revive a filing deadline that has already expired? The short answer is absolutely not. If your time limit to file an appeal expired before April 1, 2026 under the old act, that window is firmly closed. You cannot use the commencement of the new 2025 Act to somehow magically revive a dead limitation period. Now, sure, you can still apply for a standard condonation of delay if you have sufficient cause, but the new act itself isn't going to automatically grant you a free extension. Let's quickly run through some common slip-ups you'll want to avoid during this transition. First, do not mistakenly apply the 2025 Act provisions or the new forms to old assessment years like AY 2024-25. It just won't work. Second, always respect the 30-day statutory deadline for the first appeal and the 60-day deadline for the ITAT. Third, when you're e-filing, don't just blindly trust the auto-populated data in Forms 99 or 115. Verify it meticulously against your own records. And finally, be absolutely certain of your jurisdiction. Mixing up whether your appeal lies with the JCIT appeals or the CIT appeals is a headache you definitely don't need. Section 6. Key takeaways and summary. To wrap things up, let's distill this down to 4 vital takeaways. Number 1, Chapter 18A completely replaces the old appeal provisions, but thankfully, the operational hierarchy from the assessing officer all the way to the Supreme Court remains exactly the same. Number 2, you need to update your standard operating procedures. Old Form 35 is now Form 99, and Form 36 is now Form 115. Number 3, everything is digital now. Ensure absolute compliance with electronic filing and digital verification under the 2026 rules. And lastly, always remember those Section 536 transition rules. The act that governs your appeal is dictated by the specific tax year in question, not just the date you actually hit submit on the appeal. As the 2025 Act fundamentally reshapes our interaction with tax authorities, ask yourself, is your practice truly prepared to navigate this new era of digital tax litigation? We hope this explainer on Chapter XVIIA has helped get you there. Thank you for watching. Please like, subscribe, and share. This video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated educational video.